Good morning, traders and investors around the world, and welcome to Thursday's exciting edition of premarketinfo.com, where we prepare you for the most important hour of the first hour of the day. Dennis, nice 20-point range in the S&Ps last night. For those of you who were up at 3 or 4 this morning, we made a high at 1241.75, a couple points above the daily pivot. If that stands as a high of the day, we have a downside target of 1211.50. The current low stands at 1220.25, hovering just above the weekly low at 1220 or 1218.25. If that holds as the high of the day, we have an upside target of 1250.25. Moving on to the Big Ten, Dennis, that Apple trade came back your way a little bit. Just nudged over that low, 390.75, that number we were looking at. That was the low after earnings. Popped up to 391.14 before crashing down and settling at 384.77. Don't see a whole heck of a lot in this stock, Dennis, until Tuesday's low at 379.45 or Monday's low at 378.20.
Was a good call on your part, obviously, Joel. That 391 number did come into play. Stock topping out there. Now trading back at 383.42. So, yeah, you got to look where those lows were there from a couple of days ago. I think, that's where you're going to find definitely some support. Probably called 380. I know we cut through it, in the low 370. But if you look overall, it's around the 380 area. It's a big psychological number, too. So I'd imagine that's where you will find some initial support. Obviously, up at that 391 area should still be resistance. So it'll be interesting to see. Apple had, been in a downtrend 2 days ago, obviously, kind of breaking that downtrend and really rallying hard. Yesterday was a give back day. If it can hold on, and hold on to that 380 area, then you'd still probably want to play from the long side down there. Starts cutting through 378, then, I think the trade is still down again.
Okay, ExxonMobil, Dennis, let's roll the tape from yesterday. Got up to that $80 level again, getting up to 79.75 before being rejected. Closed at 78.25, just above the low of the day at 78.06. Currently trading down from that level, so use that level, 78.25, as resistance if you're looking to initiate some shorts or get out of some longs. Above that, things kind of open up. Below the 78.06 level, I'd be looking for the $77 level. 77.03 was a low from a few days ago.
This $80 level, Joel, we've talked about this for the last, week or two. The guys there size. There's high frequency guys selling the 90s, and the swing traders are selling in the 80s, and you see again yesterday, this thing, every time it gets above 79.70, it's met with stiff resistance. It's 4 days in a row, Joe. Look at the highs.
Yep.
4 days or in a row there, we're right topping on that 79.75 to 79.85 area. So again, obviously, if it gets up there, why? It's worked 4 days. Why wouldn't you sell it again if it can get up there again? I know we're $2 away from there, $1.75 away from there right now, but that's the area where you're going to see big resistance. I'm a little bit more skeptical to buy this, but I don't see that much. 77, you could say, we bottomed out there a week ago. Maybe you find a little bit of support there, but I'd rather be a seller than a buyer on this stock, so I'd sell the rallies as opposed to buy the dips.
Okay, talking about resistance and triple tops, let's pull up an IBM chart here. Between 189.84 and 189.97 encompasses the last three highs. I believe you were talking about some size at 190, also protecting that all-time high at 190.53. Maybe Warren's getting out of his $10 billion worth of stock. Who knows? But looking at support here, below the low, below that 186.30, I see 185.64 is Wednesday's low. Tuesday's low was a little bit below that. There are old lows here, but a stock like this has had this kind of run. I'd probably gets going to the downside, I'd be more apt to wait to this 183.18 level to cover some shorts.
Yeah, Joel, we've kind of been spot on, not to pat ourselves on the back on this one, but we talked about that 190 again. Just like the ExxonMobil, we've talked about this 190 seller. There's 100,000 shares up there for the last 3 or 4 days. Every single day, it's topped out right in front of him, 189.90 being the high yesterday. We go into rally mode, I'll sell it up there, but, obviously if, we're $3 away, $4, so it's starting to pull away from there now. Joel, I don't know support. You can say some at 186. We bottomed out in that area 2 days ago, almost to that area, 186.30. So maybe you find a little bit there. Cuts through there, then it opens up a bit until you get down more to that 182 where we bottomed out last week.
Yeah. I'll adjust the numbers on the site. I just pulled that up. I see that 185.14. That was the low from 4 days ago, but below that, baby, that 181.87 sure looks like it's coming within range. Moving on to Mr. Softy, Dennis. Mr. Softy's been kind of soft lately here, crashing through the 26 level in the pre-market here. That had really been holding up for a long time. Now we're below that. So if it comes up to that 26 or even comes up to Wednesday's low at 26.04 or the close, I bet you'll meet some resistance there. Starting to open up here, Dennis. 25.70 was the 11-day low, but below that, I'm looking for the October 5th low at 25.16, which would be a huge move in Microsoft.
Yeah, I agree here, Joel. Once you start to get through 26, it does open up. We're still in that area, 25.93, so I'm not going to say we're through there, any significant amount here. So, but we start breaking down and going 25.85, 25.80. Then obviously once you cut through the 25.70, that low that we had the other day, then it opens right up. And I agree, you could go down that 25.16 or call it like 25 area. It seems like the whole numbers come into play on Microsoft quite a bit. So right in here, I don't know if I'd be a buyer. Obviously 25.93 is cut through 26, but, it gets to the low 25s, and maybe I get more interested from the long side. Obviously, for whatever reason, if we were to rally up in the high 26s, you have resistance all over the place.
Okay, Chevron Corporation, Dennis. I guess fixing that oil leak didn't fix the leak in the stock price. Coming back down near this $100 level, it did, it had that ex-dividend, and we talked about that yesterday, that, the dividend players, obviously the people that bought it the day before, they get marked at, at the close from the previous day. It got above that level, Dennis, but it certainly didn't hold it for very long. We right now are trading on Wednesday's low, so we got a little bit of support here. I'd be hesitant to buy it, though. I know you're going to tell people you like the $100 level, but if this thing starts to cut through 174 with some momentum, I might be looking for the October 18th low at 97.97.
Yeah, it gets sketchy. Like from, that technical perspective, we always say resistance becomes support. 2 months ago, 100 was huge resistance. In this case, you could say, well, maybe, it bounces off there the first time. It's a psychological number. It was a resistance before. It's possible that it might bounce off the 100, but I kind of agree. If you look, the biggest problem is that below that 100, it opens up. So, where do you really, you got to be a tight stop if you're going to buy it off that 100 area, because you could find yourself under, some heat and quite in a hurry, especially since the stock, has, I know it was an oil leak, but the stock has been in sell-off mode here for 2 days. Obviously, they get the leak solved, but still the stock was down another $1.41 yesterday, and market down as well, contributing to that sell-off, but it has fallen off significantly, and it could cut through that 100 area. So if you do buy off that, just have a tight stop.
Buy to cover a short, don't buy to go long, right?
Well, yeah, if I'm short the thing, I probably already covered, so.
Okay, J&J, still bouncing around. Really, you talk about resistance again. You talk about a triple top here. With decimals, it's hard to get the exact numbers. But Monday, Tuesday, and Wednesday's high, we're up at that 65.16, 65.33 area. So excellent resistance there. Trading odds on the day. I don't know if it's offered down or not, Dennis, but we did cut through some pretty good support, that 64.50 level. I think it's a low-risk short in that area. You might take a little bit of heat. But below Wednesday's low at 64.30, I'm looking for that 5-day low at 63.66.
Not down much, Joel. Offered down in nickel at 64.35. Best bid up at 64.20, which is pretty high. So, $64 has a little bit of size starting to form. Nothing too significant, but it's the only thing that I see noticeable. 65.50 up there. I see some size up there. So anytime the stock seems to go into the 65s, it's just met with stiff resistance. I don't see any reason why that's going to change. So if it does go into rally mode for whatever reason today, you still got to be a seller in the 65s altogether.
Okay, same situation with Procter & Gamble here. Tuesdays and Wednesdays highs smack right next to each other, 63.89 and 90. I don't know if there was any size associated in the book at 64 to back that up. Came down, closed at 63.10. Kind of get some spotted. You got a bunch of lows down there. I see 63.10, 63.05, 62.93. Let's just call it below the 63 level. Let's look for 62.60. And then coming back on the upside, you get a chance to sell this thing at the close. Probably a pretty good low risk short on.
There is size backing up at 64, Joel. I see another 40,000 shares up there. It's not huge, but it is significant. So I think that's why you've seen it top out here for a couple days in the high 63, 63.89 being the high yesterday. So again, I'd probably be selling the 63.80s, 63.90s. Well, you've talked about that mid-62 level quite a few times. Maybe you could try it there. But I don't know. This is actually a stock that's winding up and getting in a tighter range, too. If you look at that, last 3 weeks of trading, it's getting lower highs and higher lows. This is kind of winding up for a move. I'm overall biased kind of to the downside right now, but, that bias obviously being the short-term trader that I am can change in a hurry. So I think, you've got to be a seller in the high 63s, and I probably would lay off the buys for now.
Okay, AT&T allows you to sleep, okay, and then boom, it drops like 70 cents. And that's what it did yesterday. Probably that's what dragged the S&Ps down a little bit. Just had a host of highs and started out in the high 29s and came down to the mid 29s and then the low 29s. Finally cracked that $29 level. We got good support at 28.62. Below that, things really start to open up to the lows back at the end of October. But real rare day for AT&T yesterday to have that kind of a breakdown.
Definitely a breakdown day for AT&T yesterday. Interesting enough, it's actually trading up 6 cents here in the pre-market. Not on a lot of size, but doesn't look like it has very much weakness. I did notice last night it was trading kind of flat too, even though we were down 4 or 5 points in the S&P after hours. So AT&T is showing a little bit of relative strength. Obviously, we broke down through that key 29 support. Maybe you see some resistance if you get up into that area and into the low 29s. Major resistance up at 29.50, but I don't think it's got enough gas to get anywhere near there today. But, in the mid, 29, 25, 29.30 area, I'd probably be a seller for sure.
I don't think it will ever trade 29.50 again.
It may not, Joel. It may not.
Okay. We can bet that one. We'd have to live a long time.
Well, maybe GE. Not if it traded it, but
GE finally cut through the $16 level, Dennis. Similar situation as to the AT&T. The highs kept on coming down from the weekly high. Closed right near the low, 15.92 was the low with a 95 close. Currently hovering right in that area, so you got to look at it as support until it's taken out. The weekly low, 15.75, could come into play today, but I do see it opening up at that after that level, the 15.24, which was our low back on October 7th.
And the chart, if you look at it there for the last 2 months, there's like a head and shoulders there. I'm not a big pattern trader for, patterns when you're seeing technical formations, but you can't argue with this really. You can look at this, it's, stable. It was in the mid-16s for quite some time, broke above, 17 there just briefly there at the end of last month, and now it's restabilized in the mid-16s, and now forming and now actually starting to break down through the 16 area. So, if that pattern does hold, it would say, that we're probably going to head lower. Major support at 15, which, was that level that we talked about for 2 months. So I don't know if you want to play it through the 16 or not. You'd probably have to give it up to 16.20 or 16.30 if you were really that swing trader. But, there could be a trade there cutting through the 16.
Okay, quickly on Coca-Cola here, sitting on major support here at the 66.80 and 91 level. If that doesn't hold, let's look for 66.40. And above the close, things open up until that 67.80 level. Folks, that's our show for the day. We'll be back in a few minutes with the market movers.